Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim. Thanks for inviting me on.
So the weather in Florida is finally acting like Florida weather should?
Which is right. It shouldn't act that way because, Lord knows, we don't need all the rain. You look around and see all the plants and the insects that it brings. They could probably do with less watering.
Rick, the oil cartel, OPEC, has decided to cut back production. Is that going to boost prices dramatically again this summer?
It already did. You know, the powers that be got their short squeeze from that news, but I've never been a big believer in this idea that curtailing supply could drive oil prices higher and higher and higher. I think ultimately it depends on demand. And that's not exactly a rosy prospect with the whole world slipping into deeper recession.
Now, last fall in the Vancouver area, we saw gasoline hit $2.67 a liter. That's $10.68 a gallon. That's pretty outrageous. But we also had a carbon tax increase that hit April 1st, 10 cents a liter, 40 cents a gallon. Would Americans put up with a tax hike like that?
Well, it's a funny question because they routinely do, because the price of gasoline is it's psychotic. So, 40 cents is, compared to some of the moves we get, the swing moves, is not particularly significant. But I guess, the thinking is you just add that extra 40 cents that's guaranteed to be priced in, and maybe there is some pain. But, I thought the economy would seize up when gas went above $2 a gallon. But in the end, everybody just sort of grins and bears it. And we're in a phase now where all vendors of everything are taking the opportunity to raise prices, to jack them as high as they can under the cover of a kind of general inflation. That's what they're doing. And you get the idea that they've kind of overdone it, but it's a little premature to say we're going to make them pay.
There's also the phenomena of what they call shrinkflation, where the packaging is smaller. I've noticed my shampoo is 30 milliliters or an ounce less. The cream that we get used to be a liter or about a quart, and now it's an ounce and a half less.
Yeah, and inflation is one thing, organic inflation, but the shrinking packaging is just sleazy, deceitful, cheating capitalism at work.
What's your outlook on inflation?
Well, I think we've really arrested the trend, yet to be felt in full measure when real estate starts to deflate. And I read somewhere where this, according to the Fed, that housing inflation is really one of their main things that they measure. But that's garbage, really. It's the most, I guess. It's the most, it's the last measure I'd use, really, because obviously people have discretion about paying up for homes, and it's been a while since they paid up, other than in some of our toniest redoubts. But anyway, when we see a full-blown reversal in real estate prices, then you'll know inflation is definitely over and deflation is here.
In Canada, they just released figures. The average rent is up 10.8%. Is that sustainable?
No, it's not. And, we've talked before about how it is failing to be sustained in Nevada, for one. There I have a little bit of good information from a source, a friend of mine, who's in the business. And, the rents, this one private equity player owns 4,000 homes in Las Vegas. And rather than acknowledge that the prices have been softening, and rather than reducing rents, they don't want to do that because it would be an admission of softness in the market that would virtually crush the equity value of their 4,000 homes. So what they're doing is offering incentives to tenants to sign up. You get a 3 months rent, or they don't collect the security deposit or something like that. So that's just to sort of to mask the softness in rental prices. But, you've got private equity now as a 10% plus stakeholder in spec real estate. They bought a lot of homes with the idea that they have to rent them, that they're going to rent them out. And we've discussed this many times. They didn't really care how much they paid. They bought the top of the market, and they paid top dollar for relatively quick refurbishments so these units could be rented. But even though their accountant said it's okay because just look where we'll be 10 years from now, but that 10 years is assuming that very, very good times continue. So the rental market is a key area will be a key component of the coming real estate collapse.
The Canadian Central Bank has held off on raising interest rates. They've held steady at 4.5% the last three opportunities they had to either hike rates or lower them. Do you think the U.S. Fed is about to hold off on raising rates, or are they still going to keep just pumping them higher?
Well, it depends. It depends whose chart you're looking at. You can make a case that the Fed has achieved in terms of real rates and the yield curve. They've with all the tightening they've done so far, they've only reached the point at which Volcker actually began tightening. So by that measure, Volcker being the guy who really did crush inflation, our own current Federal Reserve should barely have begun.
Right. And of course, we know back in the early 80s, we saw interest rates. Canadian savings bonds paid 21%. And I scraped together every penny I could to buy them at that rate because I thought nothing's going to pay that much ever again. Would we see interest rates that high again, or could we?
I don't think so. I mean, I made an error some time ago, a couple of years ago, with the prediction that the economy would collapse when rates got to around 4+%. But they've obviously weathered more than that, and you've even seen, assets, particularly the stock market, get pumped up since then. So, but I'm not sure how we could even get to 21% rates, other than have them be 20%, nominal, meaning we'll have our 20% rates, but we'll be inflating it at 30% then. But I'm not an inflationist, so that's certainly not what I'm predicting.
When will we see the first crack in inflation? Have we seen it? What will the signs of that be?
Well, we've had certainly moderating inflation numbers statistically. I'm never a big believer in official statistics, but I guess the first place you could see it really is at the grocery store, because there a lot of gouging has occurred, and you get to the point, where you pay $5.79 for a small tub of Kerrygold butter, and you think, well, geez, will I substitute margarine if it goes above $6? So I think a lot of us as consumers have sort of reached the threshold where we're substituting. We're thinking, I'm just not going to pay anymore.
Yeah, I realized the cost of groceries myself because my wife usually does the grocery buying. But I thought I'd drop by the grocery store for a snack, and instead of getting something in a plastic bag that's salty starch, I bought an apple, and it was $2.91 for an apple.
You're right. They've got 26 varieties of apple, and they're all priced by the pound. But when you put a good-sized apple on a scale, that's what you're in for, is your basic $3 apple.
Yeah, so I thought I'd be healthy. I'll still buy that apple instead of a bag of chips or like I said, salt in a bag with a bunch of starch.
I go for the snacks myself. I've got an apple sitting on the counter there, like all the last 10 apples I bought, and I just haven't gotten around to eating it. The pretzels and the chips come first.
I was going to say, if you want an attractive apple, put some stevia and cinnamon on it. It's like a healthy apple pie without the crust.
Yeah. Or you can coat it with the local, your local bee honey.
Yeah.
And there's a sugar substitute I got that was priced high enough that I thought, well, this must be really good. It's called, Mindfully Delicious Organic Zero Sugar. It's pure organic erythritol. And I have to say it's the closest thing that I've tasted to sugar, but it works out to be about, $11 a pound or something.
But you don't need a lot.
Well, no, you know how it works with the American diet. If you've got something that you can put a lot more of it on.
We'll have more with Rick Ackerman right after this.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more.
Welcome back. We're speaking with Rick Ackerman. Rick, what's going on with gold?
I love gold. And, every day the bad guys knock the price of gold down. It definitely watches the clock. Your best buying opportunities are in the dead of night when there's nobody around to buy. And then sometime around 10 or 11 in the morning, they just knock it down. But, just to read you from my current, on my front page, I update gold. I've been using it for the June COMEX contract, a 2079 target, and that's kept us on the right side of this move for a while. But I was looking for it to get above a lesser resistance down around 2029, and so I sent out a message last night to my guys that said the rally accomplished what we'd asked of it. Then gold did its by now obligatory daily dive, but a score more of them will not change the fact that this is a bull market and that all upside targets provided here for the foreseeable future will be achieved more or less exactly, if sometimes tortuously. And just to remind listeners, we talk about kind of the broad issues, but the specialty of Rick's picks is forecasting, and I would challenge anyone to get it right as consistently or as precisely as we do every day with the technical forecast. So, and keep your eye on gold 207940 has been a target that's been coming for the last 200 points. And so we're up in a zone where we could see gold make a temporary top.
Is it the same story for silver?
Yeah, silver looks great, and I've been using a target of 26.20. That's basis the May COMEX contract. Silver's currently trading just beneath that. It got within 8.5 cents of the target today. It touched $26.11 an ounce basis May COMEX. So silver is also up at a height where we might expect a little correction.
Anything going on with the other precious metals, palladium and platinum?
All looking good. You know, they're enjoying companionable rallies. Let me just see what we're. I'm sticking with gold and silver, but silver for pretty good upside leverage. You know, you get some of the moves. Silver hung on better than gold when both were having corrective moves. But and as far as palladium, I can tell you that the futures markets are almost too thin to trade. It's a very difficult market to trade, but you get a lot more liquidity in gold and silver.
Bitcoin topping $30,000 for the first time in a long time. Why is it so popular now?
I've been sounding a theme in Bitcoin, and again, let me just remind you that my business is forecasting, and I've been using a target at 30,873 in Bitcoin since it was down around low 20s. And I'm not a Bitcoin fan by any means. I think it's ultimately worthless, and it's a big con job, but that doesn't stop me from putting out a hella bullish forecast when it's technically warranted. So we've been using a 30,873 target, and I think that'll be precisely correct. But I don't attribute the rally in Bitcoin to bullish demand. There's just no shorts. There's not a very active market shorting Bitcoin because you never know what the availability of it will be for purposes of borrowing to get short. So the market, there's no real incentive out there. And if you look up, if you Google search shorting Bitcoin, you'll see that there's 100,000 web pages on that subject, none of which gives you information sufficient to help you make money at it. So what happens in Bitcoin is that there's really no bullish buying. Bitcoin is manipulated mainly by what you would call strong hands, people who are and institutions that are in Bitcoin at much higher levels. And being the strong hands, they're not desperate to jump all over it every time it rallies. So the rallies are based mainly on supply backing off, so just getting out of the way and letting it essentially waft higher on fumes. And the fact that it's wafting doesn't much change the method that I use. It doesn't affect the method I use to target it. But I think those powers that be in Bitcoin are looking to get it. This is just a wild guess, but I think at around $40,000, all of the losers who have been praying, "Dear God, let me just get out even or small losses, and I'll never do it again." But if you get Bitcoin, I think around 40,000, all those prayerful Bitcoin holders are going to turn into greedy Bitcoin holders and start recalling the predictions that were made about, Bitcoin's going to 100,000 or 500,000 or whatever it was. I mean, my valuation of Bitcoin based on the ability of the cryptos to record transactions in a secure way, I think Bitcoin should be trading closer to $3 to $4 of intrinsic value. And instead of a current 30,400. That top, by the way, a prospective top, is pretty near. Bitcoin is traded as high as 30,609. And again, that's off a long-standing target of mine at 30,873. So it's gotten within, I think that works out to be about a zillionth of 1% of my target. So don't be surprised if Bitcoin comes in for a little selling here.
Anything else we should be keeping a real close eye on right now?
Well, the bear market rally is fun to watch, and you know it's a form of mass psychosis, and you get to sort of appreciate the fact that everybody's trying to short it on days like today when you have kind of a ratcheting rally. It makes a top, and you think, and it's topped in a great place. It might be at a trend line or all your indicators may say it's topping right here, but of course everybody's watching the same indicators, and they get squeezed when we get these ratcheting highs 10 times a day. So it's very challenging to get short, and the only thing I can do really is find places to get short where I'll make a little bit of money if I'm wrong. You know, we'll get some sort of pullback, take some profits, so that the trades that I'm doing wind up being, you know, scratch trades at worst. And that's the only way you can play it if you're addicted, as most of us perma-bears are, to the idea of being short.
Rick, thank you so much for chatting with us.
Well, always a pleasure, Jim. And just to remind your listeners, you can get a free trial to Rick's Picks just by going to rickackerman.com and clicking on the free trial tab up top.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. He was speaking to us from South Florida. If you have any questions for Rick or any of our guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.